Have you ever wondered if pro traders are hunting you in the market? If they're looking for your stop losses, if they can see how you're trading? Let's see how you can avoid this, and if it's even an issue.
Hey fellow traders, good to have you back. Wonderful to see you again. Well, I can't see you, you can see me. There you go. Big thing here is, are the pros hunting the beginners out in the stock market and taking all their money? Are they literally sitting there going, ha ha ha, there's all the new guys, let's get all their dosh and let's put it in our pockets? Is that what the stock market's all about? Try and tell you that 80% of traders lose money, that most traders lose money. In fact, if you're trading on the 5-minute chart, 99% of traders lose money. And if you don't like risk and you don't like losing money, you shouldn't be trading. Don't trade. On that note, and check out my secret blog. I do put out a free trade idea every day. It's not financial advice. I don't give financial advice. It's just a trading idea, but it's free and it's for you and it's there every day. While you're there, pick up your free Forex book. The free Forex book is in a PDF format. It's in the index, it's on the side, it might even be in the description here. Grab it for yourself. It's in a PDF format as well. It's free and it's for you. Are the pros hunting out your stop losses? Are the pros hunting out your beginners? Are the pros hunting out you? Whether you're a pro, whether you're a medium trader, whether you're a pro trader, you obviously want to be a pro trader. You want to get up there and be at the top. But to get there, you've got to go through quite a strong learning process. One thing they are quite right about is the stock market consists of willing sellers and willing buyers. And if you're not very good at it, then the successful guys will obviously take the largest sum of the money because they know what they're doing. So you are going to pay some school fees and you are going to take some losses. The trick to this game is to get your psychology right with your edge and manage your risk and take less losses and make more wins.
Let's have a look at how you handle your stop loss, and let's have a look and see if we can stop the pros from hunting you out, because that's the whole point here. Now we're on the 4-hour chart here. Now what I would normally do on a 4-hour chart, you'll see there's some demand areas here. Okay, and there's another one down here, another demand area. You don't have to draw them all in, but there's also one up above over here. Now, normally we go to the higher time frame and we draw in our support and resistance. But if you wanted to say, for example, trade this supply and demand area, this downward trend that's developing over here, you can do that because you've got a head and shoulders, which is developed in here. And a head and shoulders, as you know, is a very, very strong pattern. And normally when it breaks below this head and shoulders, as this one has, you normally get the same distance down as the distance to the head. This support area down here, which is showing as very strong on the 4-hour, is quite relevant. That means you would take your trade out of the resistance area down into this support area. That would have been a pretty nice trade, which you could have taken, sorry, that's a little bit higher, it's up there. Okay, remove that, let's just move that up. So your trade would have been something like that. Now your stop loss, you put above the resistance level, but also above the last high. Don't put it on the last high, because that's why your stops keep getting taken out, because everybody else's stop losses are there. Put it a little bit past and a little bit above that area. You can, if you want to, even go 1-to-1 and put it above the entire area, and you'll never get stopped out, most likely. And it's just a safety stop as such. Now let's remove all of these drawings and do it properly. Let's go to the day chart. And if you go to the day chart, you can actually see, we go to the line chart. If I was to take, for example, there's a big area here. Let's take this area and say we want to trade into this big support area. If we trade into this rather giant support area, let's take it back to the candles. You're going to have a situation of it coming down into the support area and bouncing out. If we ignore the head and shoulders on the 4-hour, if we take this back to the 4-hour chart, let's have a look at what it looks like. You'll see it's in a very, 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 very strong support area. So this can be considered a really good support. Now, if you look at your head and shoulders, the support area is actually way past your head and shoulders. So there's a really good chance that this is going to come all the way down into this support area and then most likely bounce out. But how do you manage your risk in this event? Let's say you're just waiting for the long trade. So your long trade is going to be, as it comes out of the support area, you're going to take your long trade with a view to it going up probably to the last high. Okay, that's your hope anyway. Now, how do you manage your risk? What you do is you take your risk, you put it below the support area, because once it comes down below the support area, then your trade has invalidated and it is no longer valid. And if you were going to go long, would you go long in this area? Most probably not. You'd probably wait for the short and go short. So if your trade has started to come out down at this level, you would want to get out of your trade in a stop loss. But what I would do is not take the stop loss at that level or that level, which is just the lowest low, recent low. Rather take it below the last major low. And you're still not at 1-to-1. You're probably still at 2-to-1 on your trade here, but it's below that level. Now all the stop losses will be hunted out in this area, and most likely these areas here, which means your stop loss will be beyond that and most likely pretty safe. If it's messing around in this area and you just want to get out of the trade, you can always wait for a little bit of a positive move and just get out at a break even and walk away because it's a bad trade. But managing your stop loss is effectively just keeping it away from where they hunt out your stop losses and just below those lows and those levels. That's why I use support and resistance or supply and demand, is just so that I can manage my risk below these levels. It's as simple as it gets. That way, if you have any other system, it's difficult to manage your risk. So this is how you would do it. I don't think the pro traders are hunting you out. It's effectively that you're putting your stop losses in these areas like everybody else does, because that's what they tell you to do. And then obviously when those prices cut, the algorithm just basically sends the price down. They come hunting out all these orders that are sitting here. There'll be a whole lot of orders. Look at this. This is basically a demand area because it's right there. There's a whole bunch of orders going up there. They're just jumping up. There's 1, 2, 3, 4. So when it comes back down and it hits this area, it's going to take out these orders. That's why the money's lying there. The money's going to be lying here as well, and it's going to be lying here as well. And they know that the money's lying there. They're not interested in you or your little 1 cent's worth. They're interested in all that money that's lying there. They want to take that money and gain liquidity. That's what it's all about. So put your stop loss beyond the liquidity and you probably won't get taken stopped out. And if you do, then the trade really has invalidated and it's pretty bad.
This game is not about the pros being better than you. It's just about you getting your psychology right. The reason those guys have become pros is because they've become good losers, not because their strategy is better than yours, not because they got this amazing trick strategy. They might have better software, they might have better information, they might have better people around them, and they might have more to trade with, but their strategy is not necessarily better than yours. You might have a great strategy, but your mindset is not as good as theirs because they've been doing this for 30 years. Their brain knows how to take a loss or how to handle things in the market when things are bad, when things are good. Because one of the big problems for beginners is when things go well, that's the biggest issue because you get super excited, the adrenaline starts pumping and you start throwing more money at your trades. And then when it hits you with a loss, it's really painful. And that pain, it's inbred in human beings. Okay? There's nothing you can do about it. It is there. You tend to have a fear. You tend to have a pain when things go wrong. This is inbred from us from the dawn of time. You can't get rid of it. So when things start going wrong for you, if you can't disconnect yourself from a loss, you will feel that pain. Now, the only way to make that pain easier is to take trades on the same level for as long as possible. Don't start putting more and more money in because you're more and more confident all the time. Try and keep your trades at a level where if you take a loss, you can accept that loss. And that loss will be okay. And you know what that loss is going to be. So that's like buying a trade. Don't rush in there and start throwing all your dosh in. And then when you take a loss, that loss is too big for your psyche to handle. The pain is too much. It's too much of a loss. So if you can handle losing $500, if you can handle losing $1,000, or if you can only handle losing $100, you need to take that choice when you take the trade. You need to say, I can handle losing $500 on this trade, or I can handle losing $100 on this trade, bearing in mind that I'm going to make $500 on this trade if I lose $100, bearing in mind that I'm going to make $1,000 on this trade if I take a risk of $500. But when I make the $1,000, the next trade I make, I'm not going to risk $1,000. You can't handle losing $1,000. You're used to losing $500. Keep your risk within your means. Keep your risk within what you can handle losing. That's where the big trick comes in, guys. And then take your losses as you do and go on to the next trade, go on to the next trade, go on to the next trade. But make sure you do well on your winners and don't add to your losses. Don't try averaging down, don't try hedging, just take your loss, walk away. You understand how much loss you're going to take before you take the trade, and that will make you successful. The pros are not hunting for you. They don't know where you are. They can't see you in the market. They don't know who you are. The pros are doing exactly what you're doing. They're seeing a trade, they're taking a trade, and they're hoping they're going to win on that trade. Just like you when you take a trade. You're taking a trade, you're putting your money in the market, and you're hoping you're going to win on that trade. Whether you're a pro, or whether you're a beginner, or whether you're a mediocre trader, you don't care where that money is coming from. All you care about is that you took a trade and it was successful. That's all that matters to you. And you made a profit and you walked away. You don't care if it's a hungry person that gave you that money. You don't care if it's a rich person that gave you that money. All you care about is that you took a little bit out of the market. Other people that trade into the market do it by choice. They don't come to me and ask me if they can go and trade in the market. They trade in the market by their own choice. And I'm here just to let you know how to do it, what the risks are. I can help you. You can ask me in the comments, but if you do comment, and I love your comments, thank you so much for commenting, but if you do comment, do me a favor and watch the whole video. Like I said in my last video, so many people make comments based on what other people have said, not what is in my video, and they assume that I'm on the same track as those people, and I'm not. I'm trying to tell you guys the truth about the stock market, and that when you get into it, it's risky. When you get into trading, this is not an easy ride. This is not a free ride. This is a difficult ride, and you're going to have to work hard at it to be successful. But as I say, the pros are not hunting you out. The pros are not taking your stop losses out. They're not looking for your stop losses. You just need to learn where to put them. You need to learn your strategy. Watch my other videos and you will see my strategy. Thanks for watching, guys, and cheers. Bye.